Hey Ali, what are you doing with toilet roll?
Nothing. I'm just buying essentials only. Essentials, yeah. Nothing. Lai liao. Another round of staying at home is upon us. Heightened alert. Time to start stocking up on the Maggi Mee and toilet paper. Well, this is what exactly happened when the Singapore government announced it. It sent Sheng Siong shares shooting up 10%. So, is it time to buy Maggi Mee, toilet paper and Sheng Siong shares? Hey investors, welcome to The Market Talk. I'm Ali, your humble graduate from VIA. I love investing, studying about companies and market trends. Today, we will look into Sheng Siong. Sheng Siong had a great 2020 and especially made up the news when the board decided to dish out bonuses of up to 13 months to its employers. Is 2021 going to be a spectacular year for them? Today's stock review is the Sheng Siong Group Limited. Sheng Siong, established in 1985 and listed on the main board of the Singapore Exchange in 2011. Sheng Siong is one of the Singapore's top retailers. They sell quite a lot of your grocery needs from packaged foods, frozen foods and even live fish, or as they say, wet and dry. Currently sitting on a market cap of $2.4 billion, Sheng Siong Group has 63 stores island-wide. They boast to sell over 1,400 products with 23 house brands. Interestingly, Sheng Siong has also reached Kunming, China, where it has 2 stores. Now let's look at their performance. Wowee! Sheng Siong had a good 2020, but their past 5 years have also been good on them.
But the growth is not limited to revenue alone. The company saw its net profit and subsequently its EPS also grow. 2020 was a spectacular year for them. EPS grew from 5.04 in 2019 to 9.22 in 2020. That is an almost 50% growth year over year. By a lot of measures, the company did very well. Now, what they did with the money is mind-blowing too. Firstly, they announced special dividends to shareholders. FY 2020, a total of 6.5 cents per share was given out to shareholders. It's an 83% increase from the year before. Then, to all their staff, they received bonuses of 5 months to 15 months, depending on seniority.
That is mad. Lastly, of course, the board got some of the loot. All directors received about 5 million in salary and bonus for 2020. Except for one director who is on a fixed pay, she received about 350,000 for year 2020. Both chairman and the CEO of the group said that the stakeholders earned it. And I can't complain there. Sheng Siong workers reportedly even worked extra hours and weekends to ensure that business ran per normal. Kudos to the board for recognizing their efforts. So, is it time to buy Sheng Siong stock? Now, let's see. With so much good news, with 2021 and with us in heightened alert mode, should we also find our bonuses with Sheng Siong stock? Let's start with the performance of the stock in the market. If we look at the past 5 years, we can see that there has been a noticeable climb, with 2020 and 2021 propping up prices dramatically. Currently, the PE ratio is at 23.31. PB ratio is at 6.08. That's quite high, especially considering that Sheng Siong owns shops and warehouses and goods. If you perform some discounting calculations on the stock, you would find it on the expensive side too. One silver lining I find is their dividend yield. It's currently at 3.99%. You may think, what? Only 4%? But hey, when the company is doing well, at least you know the 4% per year is given. Also something to consider is unlike DBS Bank or Keppel, Sheng Siong's chairman and some board members have a lot of skin in the game. As one of the founders, the chairman Mr Lim Hock Eng and the CEO Mr Lim Hock Chi have substantial ownership of shares. And quite honestly, from what I read in the newspaper reports and from the interviews, you get this sense of the old Singapore fighting spirit. It gives you confidence that they are not in it just for the money, but also for the benefit of the group. But this is just my opinion. So, like many of the industries and companies, 2021 is showing signs of inflated prices in the stock market. PE ratios are high and market caps are at all-time new highs. Sheng Siong is attractive on some measures, and if you like buying from them and see that Singapore is treating them well, maybe it is time for you to stock up on Sheng Siong stocks. So, have you gone out and bought your toilet paper from Sheng Siong or from another place? If you've been to a Sheng Siong near your house, do write down in the comments what you like about Sheng Siong and what you think they can do better. I'm sure they'd love to hear about it. And before you go, remember to hit the like button and the subscribe button. I'll see you in the next video. Bye everybody.